All right. Is this thing on? I think we're on. Okay. Three, two, one, and go. Snap. Welcome back. This is episode 2 of The Broke Investor. I am Crypto Antonio, and this is not a just crypto channel. We talk about precious metals, Bitcoin, and there will be other things coming down the pipe. So don't go away because we are talking today about precious metals, specifically silver and Bitcoin, and how to invest and hold these given assets. As you can tell by the thumbnail, there's we're going to discuss two kind of ways of kind of invest and hold these things. The main one is a self custody option. The second one is through an ETF or a brokered option. If you don't know what that is, if you clicked on this video, it's because you might be broke and you want to become an investor. Hence, this is the Broke Investor. It's not too late. It's a good thing that you're waking up to what's happening in the world because it's really terrible right now. The economic situation is wild. But as long as we stick together and we kind of start to learn together, we can move ahead and benefit, prosper, and leave a legacy. So let's get down to it. So we're going to talk about ways to invest in and hold specifically silver and Bitcoin. This can also be applied to gold and also Ethereum, which has now been approved to have an ETF but has yet to trade. So let's start with an ETF. Do you know what an ETF is? It stands for Exchange Traded Fund, and you've probably heard about ETFs being in gold. You have ETFs for commodities. You have ETFs for a bunch of things, basically. So what that means is an ETF is a product that is available for investment by mainly the general public, mainly the general public, where you can kind of put money away and a third party, a trusted asset manager, an approved asset manager is going to buy the underlying asset, in this case silver or Bitcoin, and you will basically have your assets custodied through them, and they will buy and sell the underlying asset as you cash in or out of the investment. Got it? Good. So what that means is it's a third party, so that means you're not in direct control of the asset. It's more of a, I say like a less hands-on approach because you're not responsible for it. Whereas there's the self-custody option, whereas you go, you buy it, you hold it, you hang on to it, you secure it, and it's literally up to you to keep that safe and to hold it. So if you're in silver or gold, or mainly silver or gold, if you're self-custodying, you go to your local coin shop, your bullion dealer, and you literally give them a credit card, a bank card, or cash, and they will give you ounces of silver, gold, whatever you want, 5 ounces, 1 ounce, a kilo, whatever you're trying to get, and then they give you that silver or gold physically, and you are, as soon as you put your hands on it, you're self-custodying it. And then you want to do something like put it in a safe, bury it in the backyard, put it in your underpants, whatever you think is going to be the safest bet. So with precious metals, there's another option where you can hire a safe house or a safe to put it away for you, but at that point you've literally given your asset to someone else and pay them money to make you feel like they're keeping it safe. Do you know they're keeping it safe? Maybe they are. Maybe you've toured the vault and you're confident in that. But I think in this day and age where there's a lot of there's a lack of trust in third parties and in banks and things like that, more people are inclining to self-custody the precious metals, gold and silver. So that's what that means, self-custody. You have it, it's on you, it's up to you to keep it safe. On the Bitcoin side of things, when you're self-custodying Bitcoin, you go to your exchange, you go to your Bitcoin dealer, which is the exchanges, of course, your Coinbases, Krakens, KuCoins, Mexi, your Blowfins, those types of marketplaces, and you basically transfer that Bitcoin onto your own cold or hot wallet. We'll get into those in another episode. So if you just, let's say you buy your crypto, we'll just say crypto, your Bitcoin from one of these vendors, and you leave it with the vendor, it's the same as taking your precious metal and sending it to a basically keeping it with the coin shop, or keeping it with a safe somewhere else, right? You've bought it and it's in someone else's custody in your name. You know what I mean? You follow what I'm saying? So it happens in both asset classes, in the digital asset class and in the physical metals asset class. So it's important to really understand where your money is going and where the underlying asset is going to lie after you've purchased it. Myself, 100% self-custody. I don't trust nobody with any of that. I have secure systems in place, and I don't let anyone kind of act as that broker for me. Other people have they want a less hands-on approach. They want to just kind of let someone else do that for them, and everyone is different, and that might be, good for them and their playbook, but for me, no. Now, let's talk about an ETF, which is an exchange traded fund. Say it with me now, exchange traded fund. Right, so basically, at that point, did we ever cover that? At that point, you have a Bitcoin ETF that's just been launched, now Ethereum, and you have a silver ETF. I think one of them is called SLV. So with this one, what you do is you basically give your money to this trusted asset manager, and they, let's say, you're Jimmy and Johnny Jets fan, and you want to buy some silver. You give your money over to the ETF. Let's say it's SLV, whether it's through your Wealthsimple or another avenue. You can have access to this fund, SLV, and then you put your money into this fund, and then the fund goes out to the metals exchange, the CME probably. We'll talk about what metals exchanges are later, but it's kind of like the big marketplace for metals, and it's usually only where banks and big wig type entities can buy it. So, Johnny and Jane Jets fan go and give their, let's say, $1,000 over to the ETF. The ETF will go and buy $1,000 of silver, and they will keep it for them. Hand over a little receipt of paper, say you have $1,000 of silver with us, cash out at any time. And as the price of silver kind of fluctuates, whenever you decide to buy more or cash out, that price point will be the reference as to how much you will buy, sell, or receive. You follow me? Is that not too much? If it's too much, leave comments, let me know. I go really fast with this stuff, and for me it's just like brrr, but I get it. Because you're here, it's because we're on a road to understanding this crazy world, because we're priced out of everything, and it's like, what are we gonna do with ourselves? We're like getting priced out. So let's continue. So with the ETF, you basically hand it kind of a receipt of what your money represents in their custody. I really don't, I'm not going to give recommendations because there's no financial advice here. Nothing you see or hear here is financial advice, and it's purely for educational purposes only. But there's something to be said about someone else owning the thing you have. You know what I mean? There's a saying in the crypto side of things and the silver side of things. It's kind of the same mantra. For crypto, it's not your keys, not your coins. And for metals, it's if you don't hold it, you don't own it. So for cryptocurrencies, if you self-custody, that means you have your 12 or 24 key, 12 or 24 word passphrase that gives you access to your wallet on the blockchain where you manage the actual Bitcoin. And if you don't hold it, you don't own it, means if the metal's not in your hand, you technically don't own it. And that's a very, very true statement. But again, it depends on what you're comfortable with and what you want to do. especially in this world where ETFs are being launched, and we're seeing a lot of price fluctuations in metals as well. I hope that kind of covers it. I'm trying to see if I missed anything. I really fly through these things when I start talking about them, and it feels like I've not have gone through them. But let's reevaluate here. Let me check my notes. So we talked about crypto and precious metals, right? Why do we do crypto and precious metals? Because ultimately they are trying to achieve the same goal, which is get away from the dollar system. Because if you're here, you know that the dollar is not going as far as it used to, and it's getting hard to save in dollars and get ahead, because the system we live in is built on debt and credit, which is why credit is easier to access than actual cash. Have you noticed that? Have you actually thought about that? Because that's how it is. So crypto and precious metals people, they both kind of realize that there has to be a way out of the dollar system, or the fiat system, or the national currency system. And these two asset classes really do that, and they're both fairly scarce. We'll talk about that later. And scarcity generally means value, whereas with dollars, they're printed and they're not valuable because they're printed and watered down, and it gets harder to buy things because the more dollars in the system, the more you need to buy anything, yet you receive the same amount of dollars all the time. See that? You see how that works? It's terrible. So I think that's a good way to kind of start the conversation on these two asset classes, Bitcoin, crypto, and precious metals, and how you want to actually have them. So the thing is, in this, I guess over the last 50 years, people have gotten really used to their wealth being managed by other people. Oh, you give me this money and I'll invest it for you, and you'll see the returns and you don't have to worry. And that's kind of been the accepted route, and everyone just feels really confident with that. A great example of that is pension funds. Like, we'll get into that later down the road too, but that is what a mess. But I think now, as we see the dollar kind of retrace and lose more value, the dollars and the fiat currencies of the world, people actually want to hold their wealth and want to be responsible for their wealth, and I think that's the right thing to do. So this is a great introduction on what these two asset classes basically look like on your person and on someone else's person. So if I'm going too fast, like, let me know, because I fire through this stuff like you know it, like I do. But it's a bit of a tongue twister, because it's crazy. You hear these, the ETF and thing, and like when you hear it on the news, it's not really broken down for you. It's just kind of like these highlights. So I hope with this video you can actually understand what those things mean, because I sure wish that I could have had someone to just break it down how quickly I want to know it when I want to know it, right? I've spent so much time trying to understand this stuff. So with that said, I think we're going to wrap it up right there. At the end of the day, basically, ETF, someone else has it. Self-custody, you have it. The methods, Bitcoin, cold or hot storage wallet. That's something we'll get into later, how that actually works, but that's generally what that means. And for metals, it means it's in your pocket, or it's in a safe, or it's with the bank or someone else in your name. And let's say something like a bank goes down or fails, which we've seen happen quite a bit in the United States in the last couple of years, and hope it doesn't happen anywhere else. We've also seen crypto exchanges go down, the FTX collapse, things like that. People had their assets custodied by that entity, FTX, and they lost their assets. Thank God that there's some legal proceedings happening where some people will be refunded or reimbursed, or whatever the term is. But when a bank goes down, that's a different story. Let's say you have your metals custodied with a bank. If the government bails out the bank, there's a chance you might get your assets back, your gold, your silver that they have in their safety deposit boxes that you trust so much in because your great granddaddy had one and everyone had one. It was, oh, the bank, lose that mentality, because now we have something called a bail-in, and those are coming. But a bail-in is when the bank goes down and it's kept afloat by its depositors, people that are using their services, who have wealth and assets tied up with them. They will pay for the bank to stay afloat. You understand? So this is why it's important to understand the difference between self-custody and, third-party custody. Then again, ETF really isn't, I wouldn't call that third-party custody. I would call that it's more of a fund. So you're kind of buying a fund that is buying the asset and you're cashing in and out as you see fit. But, with the precious metals, you can, let's say, like where I live, you can buy precious metals through your bank. They'll provide that service, and then they'll also provide the service of custodying it for you. So here's the crazy thing. So you buy it from them. So you give them money, they buy it on the open market, they take a profit for making the purchase, and then they charge you money for holding it, which is absolutely wild in my books. And on the crypto side of things, it doesn't work so much like that. It kind of does. So let's say if I went to, it's gonna get to the point where I might be able to go to a bank. We're not there yet, but let's say I go to an ETF, I buy the Bitcoin ETF from them, and they hold it for me. I'm paying them to hold it for me while the asset is pretty much going up at this time. That's crazy. Why would you pay someone to hold that for you when you can just hold it yourself and take the secure approach and be self-conscious of what you're doing, right? So, important things to learn. I think that's enough for today. That's a lot of me blah 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 blah. There's a lot of talk. So this has been episode 2 of The Broke Investor. Again, if you're here, you might be like me. You might be a little broke, but you're an investor. Because I don't keep dollars. I'll tell you that. And that's why I call myself the broke investor, because dollars don't mean wealth in this new time. So I hope that's been enough for you. You take care. We'll catch you on the next one. Bye.